Welcome back to the Global Business Report here on Arise News. I'm Idia Isian, coming to you this morning from Nigeria's commercial capital, Lagos. Now, Kola Karim, the Group Managing Director and CEO of Shoreline Group, which along with the UK-based Heritage Oil acquired a participating interest in oil mining lease 30 in 2012, is in our studios, and you're welcome this morning, Kola.
Thank you, dear.
Okay, so you started out in business with your involvement with Costain West Africa PLC, and of course, your family had a considerable, sizable interest in, and today you're better known for running the Shoreline Group, where as CEO you oversee the participating interest of OML 30, which you acquired with your partner in 2012. Tell us more about this acquisition and its status today.
I think our main focus, looking at what government was doing then, is encouraging local content participation in the oil and gas sector. And in 2010, that opportunity started bearing fruit by local companies coming together with international partners in investing in sectors in the Western Delta in fields that have not been operated by the majors. So that brought about all the local oil companies you see today in the sector. There's a huge opportunity. As a business, we saw it fit for purpose to build a very strategic business in producing oil, gas, and infrastructure integration in Nigeria. And that brought about our being able to find a partner that has financial capacity, technical support in building that cohesion and growing a big business in the sector.
Well, at what point did the Qatari investors come in with a controlling interest in Heritage Oil? And how did Saavik Petroleum later come into the picture at a later date?
No, what happened was in 2014, Heritage Oil PLC sold majority of its shareholding, was bought out of the market by a Qatari holding called Al Mikab.
Okay.
When they did that transaction, so indirectly they owned a percentage in our business in Nigeria. And fast forward in 2015, 2016, we had a situation where we had the opportunity to get an operatorship to support and grow the business. And that coming into play was where we engaged Saavik to come and provide a technical service support to the business in energizing and growing production in the Delta. Unfortunately, that relationship didn't last.
Yes, because your firm has been in the news over the dispute with Saavik, which you had a TSA agreement, and they were a third-party operator of OML 30, and the agreement was terminated all of a sudden. So it caused a lot of communal unrest, of course, in the area of your operations. Now, even the DSS had to step in to contain the protest and stop everything from spilling over to communities in the Niger Delta region. So tell me more about that.
I think what happened, like in every relationship, there was a contractual obligation and there were terms to be fulfilled by the service provider. Unfortunately, we weren't satisfied that those terms were being fulfilled to the satisfaction of our business.
Can you tell us the terms that weren't fulfilled?
It was more to do with the operational procedures that's been put in place, and we weren't satisfied and happy with it. So we terminated the contract. Unfortunately, that spillover was what got into the communities, but that was contained in no time. The government got involved, NNPC, who was the senior partner, got involved, and that in itself helped ease the situation, and we've been back in business and all has been working fine.
So you were not in any way an operator?
We've always been in a support service position to our business, operating OML 30. Today, Heritage Services has always been the operator of OML 30, and that is who's providing the services.
No, you don't understand the question. Are you an operator of OML 30?
Today, Heritage is the operator of OML 30.
So you're not?
No.
Okay. And you and Saavik have gone to arbitration over the termination of the TSA, and they've also claimed that they invested about $10 million of their money to bring production to about 60,000 barrels per day, and that the termination of the agreement basically crippled their company and led to, some of their staff being laid off and reabsorbed into your firm. So is there any possibility of an out-of-court settlement with Saavik, and how have you handled the situation with the host communities?
You see, the host communities, first I'll start with that, are working very well with us. Don't forget, before the services of Saavik was employed, we were in the community.
Okay.
We were working with them since 2012. Saavik only came in 2016. So there's a big gap of relationship. That, again, is not a proper story that was told out there.
Okay.
Secondly, is because the case is in court, I cannot discuss the integrities of this case. But what is real for us is this. We're a business. We want to work in a peaceful environment with our partners and counterparties. So reality is whatever makes sense for us as a business is a decision we will make to the satisfaction of our business first and to protection of our business integrity. And that's very important for us. So the relationship with Saavik is in court. I'm sure Nigeria's judicial system will deal with the situation. And hopefully it works out for the better for all.
So how many barrels per day are you producing?
Today...
And do you supply gas?
Yeah, today OML 30 is producing about 60 to 65,000 barrels. We're oscillating there. And the gas we're producing today is only our DSO, our domestic service obligations into the gas grid. Our focus is to energize and increase production and in turn increase gas and gas utilization into the grid.
Okay, so now let's look at the wider oil and gas sector in Nigeria. What's your assessment of it? And do you support the passage of oil industry legislation such as the PIGB that could lead to reforms in the oil sector?
Look, it's important. Every sector must have structured bills to support it. The PIGB is a formidable bill. If passed and executed properly, it would energize the oil and gas sector. But be that as it may, oil globally is a regulated business, also as a business of national security, because it's the mainstay of a lot of economies, Nigeria being one of them. If you think about it, 80% of Nigeria's foreign exchange earnings is from oil. So if there is any disruptions in the delta, it affects the national economy. That's very important. Two, globally also, if you look at in the context of Venezuela, the disconnection in Iran, if you look at Libya, any uncertainties in these countries affects global pricing of oil. But the reverse and the opposite is what's happened the last six weeks. And that's due to one man, President Trump. President Trump, with all the dislocation in the global oil industry, yet oil prices has seen one of the fastest drops since in October, global oil price was $85. Today, we're $61. That's a mega dislocation. But not for anything. Everyone is talking about global growth slowing down. But I think it's all man-made. Because when the president of one of the strongest economy in the world starts a tweeting march with making remarks and fights supposedly with China, who is number two, the world will catch a cold. And that's what's happening. So when we have banter like this, the tweet that came out last week saying, oh, oil prices now, we're expecting it to go lower. Of course it will go lower because the market forces will respond to going lower. If you look at the sanctions around Iran, a major producer, if that disconnects from the market. So what I see is this. There is a disconnection today from global pricing and global production versus global consumption. Global pricing is going down. Global consumption is slowing down, supposedly, but it's not slowed down. Still there. So why the mega gap of $16 in the pricing? That's the question. You see, Nigeria as a country, we must act and act fast. One is oil is no longer the preserve, and production of oil is no longer the preserve of a country called Nigeria. Today, you have countries like Nigeria finding oil. You have Chad producing oil. You have Ghana producing oil. So the problem, Angola is producing oil. So if Nigeria's economy looking forward, we're not looking at how to diversify the core of this economy and still focusing majorly on oil, then we'll have a fundamental problem. I was in Saudi Arabia 4 weeks ago, and the CEO of Saudi Aramco actually said to me, the future of oil is we are now looking at a vision 2030 and 2050 of what the uses of oil will be other than cars and other utilization. What are we doing in Nigeria? we're still talking about using, selling, exporting, and refining oil. So it's key critical, mission critical for Nigeria to look at the future of oil and how do we continue to participate in the future sustainability of the use of oil. That will make us continue to play our role as an important global oil player.
But as an investor, what would you like to see in the framework that will enable the industry to move forward?
As an investor, what is important is this: government's continuous push for local content and local participation. That's number one. Number two, availability of financing, global financing, because the oil industry is not cheap. So provision of financial ability in helping to energize that sector is very, very important. But one thing is missing. Global investment, global banks looking inward into Nigeria wants to see security.
Of course.
They want to see certainty that their money, once they lend it to you, they can get it back. So it's very important in your world, the work you do, the message is passed out about Nigeria.
Of course.
Because it's key critical. Think about it this way. You've got the major risk managers of this international banks not sitting in Nigeria. So they're relying on social media, they're relying on news, apart from the matrix on the documentation of the transaction. So if they're getting negative reports, it's a problem.
Yeah.
So the key thing that I want to see is that Nigeria, we must always stay on the message. We must always be seen encouraging local participation. So when people like ourselves turn up in London and New York looking to borrow money, the news is seen on a positive note, not from a negative angle. Security is also key critical, because the first thing someone says, oh, Niger Delta, you're thinking negatives.
Yeah.
Let's turn those negatives to positives, and those are the ways we could attract the investments needed to grow the ever-growing demand of natural resource consumption in Nigeria.
Kola, you made a fantastic point with the media there. Now, we have to take a quick break, but we'll be right back with more questions for you. You're watching the Global Business Report here on Arise News. It's time for a short break, and Kola will still be with us. Don't go anywhere. Welcome back to the Global Business Report here on Arise News. I'm Idia Aisian, coming to you this morning from Nigeria's commercial capital, Lagos. Now, I'm still here talking to Kola Karim. And now I want to ask you, what's your take on the proposal by the presidential candidate for the PDP, former President Atiku Abubakar, who has proposed the privatization of NNPC as well as the refineries if he becomes president in 2019?
Look, there's some good values to this. If you look at the UK as an example, the North Sea, the British government do not own any shareholding in any oil block. You see, there's so many ways to skin a cat. If you look at the business of oil, government's position is being able to get revenue. So if government says, here, Shoreline, this oil block is yours 100%, but I'm going to charge 80% in taxes for every barrel of oil you produce, you're still going to end up the same way. But without the problems of looking for cash calls to fund your portion. Today, the Nigerian oil sector is designed in a way where NNPC is shareholder also on behalf of the Nigerian people. Exactly. So that means for every $100 spent, as an example, where NNPC owns 55% and another company owns 45%, for every $100 spent, NNPC would have to come up with $55. Now, that is not an easy ask when we're in a country where we have a structured finance system. So that means NNPC is not controlling its own balance sheet, as an example. So the money they receive for oil sold goes to the central account. So they have to prepare a budget. But if the business is run by myself 100%, I just pay taxes to government. So government gets its take directly. So there are positives around the proposal. The refinery, as we said, it has been talked about by the PDP candidate. The government also is already in the proposal of privatizing refineries and some of the ancillary services. So I think they're talking about the same thing. The point in play from the two political parties is on around the same, because the PIGB also drives to privatization anyway.
Exactly.
So it gives the same thing, it's just the coloration that's been put out.
Well, now, I'm certain that, of course, you've been following what's been going on with the oil markets and the geopolitics in the Gulf region recently. Now, as a major independent oil producer, how has your company hedged against the possible crash of oil prices and the threats to shale producers in the United States, as the threats of shale producers in the United States continue to pose a threat to oil price stability?
Look, there's a fundamental problem, right? When people talk about hedging, hedging is expensive, especially in a market that's going down. So the reality is you've got to calculate your bet, right? What we've done as a company is we're going to hedge a certain percentage of our production, enough to safeguard our cash repayments to our lenders, and the balance will take our chance. Because if you go out there spending millions of dollars hedging, and what if the market does not go the way you expect? So at the end of the day, for me, it's a risk mitigation process. Take a percentage, enough to cover your cash payment, and that's what we're doing. Now, if we look at what is expectation is on a global level, my take is oil, $60 to $70 is the new $100 oil. So that's where we see the market.
Now, your oil field is also in a very volatile area, so where the chance for the pipeline flows, and it's been vandalized several times. How have you handled this sort of issues?
Look, I think there's two sides to this story. Now, the pipelines in Nigeria in general, majority of them were built in the 60s and the 70s. So fundamentally, they're old. So in the process, in the real world, there should be renewal of those pipelines being built because there's a lifespan attached to them. So if you look at the Transforcados pipeline, they were commissioned in 1968. That's a 50-year-old pipeline. So a car you've been driving for 50 years that's not been maintained properly,
of course,
you would have breakdowns. So structurally, some of the problems we're having is structural. It's not man-made. Yes, there are man-made invasions into these lines, making the situation worse because a pipeline that's already weak.
Yes, but there's also the issue of vandalism.
Of course. This is what I'm saying. The vandalism issue is there, but the reality is with the relevant security apparatus being put in place to safeguard and secure and help by the communities across the line is working.
Okay. Well, now I want to talk about other ventures in which you have a vested interest. As indicated earlier, of course, your family has a significant stake in Costain, West Africa, which, of course, is into construction and thrived at one point. And I know that you're still, of course, credited for one of the tallest buildings in Nigeria, Nacom House. Now, Costain has fallen by the wayside, and of course other competitors have come to the forefront of this. What happened exactly to the company?
I'll tell you fundamentally what's happened to global construction industries, especially the legacy owned by Costain came here in 1958. That's a long time. But by legacy of its business in Nigeria, the support structure of this business from its parent company started waning when the Nigerian economy dwindled. We came in, supported and grew the business, but it's a contracting business. And when competition comes in, where majority of the contracts in the last 20 years has been contractor finance, so Chinese construction companies coming with money, you don't expect them to come up with money from China, then give it to another company to build. So that has been the disconnect. But today we've been able to partner with one of the biggest global construction groups who are coming with big balance sheet to support the Nigerian construction sector as well. So that will help energize that business. So those are the areas, yes, going forward. The dynamics of construction industry is changing. There's going to be money to grow the space. Government is the biggest spender in infrastructure space. But how much money has government got to grow the infrastructure to support it? And that's what you see. If you look around Ikoyi, Victoria Island, Abuja, a lot of construction projects stopped for the last 2.5 years.
That's true, actually. But now you're also the chairman of the board of the Nigerian Ropes PLC, another once thriving firm that was listed on the Nigerian Stock Exchange, but eventually was delisted. Now, what is the current status of Nigeria Ropes? And are there any plans in place to restore? Well, you've mentioned how they will restore Costain, but are there any plans in place to restore Nigerian ropes to its glorious past?
Nigerian ropes are actually running. It's providing support services in the sector. What we did was an intentional delisting of the company, because the company is majority owned by two partners. So the liquidity position of that stock in the market is not there. And there's no one wanting to go to the market to raise more capital because there's no need for it. So the company is doing well out of Port Harcourt, Warri and Lagos. They're providing support service to the oil industry, and that is running. Again, our focus is to continue to grow massively by taking that local content. So we just acquired a controlling stake in one of the largest EPCM business in the oil and gas sector, again, to further support the growth of Nigerian ropes. So from fabrication to construction hookups and stuff in the oil and gas sector. So that's taking place big time. The dynamics of the businesses in Nigeria, legacy business is changing. So if you go back, look at all the old names in Nigeria, you don't find them anymore. So these are the things.
Well, Kola, we have to take a quick break right now, but please stay with us. You're watching the Global Business Report here on Arise News.